Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from the wealthyhomeowner.ca, Canada's authority on home ownership. Welcome back to the show, Ross.
And thanks for having me back, Jim.
Ross, are negative interest rate mortgages here?
Negative interest rate mortgages, they've been here for a while, Jim. Negative interest rate mortgages are, let me word it to you this way. Negative interest rate mortgage strategy has been around now for a couple of years. A couple of years now. It is so awesome right now. The situation is so awesome right now that most Canadians have no idea of the opportunity that they have available to them as a homeowner. Now, you got to take this in context. I think it would be foolish for any Canadian to walk out into a recession and buy a house. I believe things are going to get better on every single aspect of home ownership over the next while. So I am not recommending anybody to buy a home. So let me get this clear. I am not recommending that anybody buys a home at what is arguably the best historic time to purchase a home, because you can create a negative interest rate strategy that is basically on a 1 to 3 basis. So what does that mean? Okay. Today, Bank of Nova Scotia released their earnings reports. And all the negative press is out there. Negative. We're laughing at it. If you go back to our May the 27th show, go back to the May the 27th show. It's on YouTube or on House Street. Go back there and listen to what we said. I think it was around 15 and a half minutes in. We talked about this. And I told everybody that what these banks are reporting is outdated data. Data that from a housing market from months and months ago. So the second quarter data was actually a consequence of the fall of 2019 data. So the second quarter reportings from a bank is actually reporting the last quarter of the housing market in the year prior. Today the Scotia released. Bank of Montreal released. Scotia under hit its targets. Bank of Montreal over hit its targets. Okay, if you understand how those two banks have their mortgage books structured, these weren't surprising outcomes. I mean, you might have been out 1 or 2%, but you wouldn't have been out the magnitude that they're claiming, the experts were claiming were the missed. Again, go back to the May the 27th show, tune in around 15:30 and listen on. You're going to hear about the banks. We told the listeners that what they were going to hear in third quarter was not what everybody thought they were going to hear. And this is what happened again today. Math is a powerful, powerful tool, Jim, because math can't fool you. 1 + 1 always equals 2. And this really works with your mortgages. So what do I mean by what I'm saying? If you have a Bank of Nova Scotia mortgage right now, hopefully you secured the Bank of Nova Scotia mortgage that is it registers a collateral mortgage, which allows you to do principal repayment advance. In other words, whatever you pay down on the principal, you can take back up. Okay? Now, what I'm saying you have to understand is not called HELOC investing or taking a HELOC out to invest it. No. What you need to do is this. You look at today. Well, actually, what we would have told you is, ideally, you would have started this procedure off in April. So after the crash of March, on the first bump up in the price of Bank of Nova Scotia stock. So you wouldn't have bought it at the bottom, okay? I'm not going to tell you to do this calculation at the bottom. I'm going to tell you to wait till it hits its first plateau, and then you buy it. Now, if you did that, and then you look at the stock price today, you realize you're still ahead. You would have returned right now. The Bank of Nova Scotia has just announced they're going to pay you a dividend of about 6.9% a year. So if you had purchased it we just talked about in April, you would now be getting a 6.9% dividend on your money. What that means is, if you had $100,000, if you owned $100,000 worth of Bank of Nova Scotia Bank, where your mortgage is being held, in other words, you own the bank where you have a mortgage, you could have used that dividend to pay off the interest on $320,000 of mortgage. Let that sink in, folks. Simply by strategically following how the banks book mortgages, I believe the Bank of Nova Scotia is somewhere like 140 years they've never missed a dividend payment. So in terms of risk, we're talking about probably the lowest recorded risk in the history of the financial markets, Canadian banks paying their dividends. So I'm not saying it's not possible. I'm just saying is when they haven't missed one in 140 years, that's the lowest risk that you could have. If you owned $100,000 worth of Bank of Nova Scotia stock, and you had a $320,000 mortgage, you paid a net interest of zero. If you had a $300,000 mortgage or a $250,000 mortgage, and you still owned $100,000 worth of the bank, you are now into negative interest rates. Your net effective interest rate is below zero. The Bank of Nova Scotia, as an owner in the Bank of Nova Scotia, the Bank of Nova Scotia is allowing you to borrow 3 times the amount of money at 0% interest. You can devote all of your money to paying down the mortgage, paying off the principal. Because the bank, you as an owner of the bank, are effectively paying yourself. This is the beautiful part of an amortization, how the amortization table works, how banks work, how the bank's mortgage book produces profits, how as an owner of a bank, you can access those profits, which in turn pay the interest that you would have paid to the bank. This is what negative interest rates really are. Can you have a strategy, a mortgaging strategy, that reduces the amount of interest you pay to the bank to as low as possible? Or is there a way that you can do it so that the bank pays you to do it, which is effectively what you could have done over the last 6 months? You could have simply watched when the lockdown was happening. You could have assumed that the housing market would have slowed, basically grinded to a halt. You would have known that the pontificators, the economists, the stars on BNN would have all come out and started saying how the banks are going to lose money. They're going to have to retrench all their start reserving funds for the risk portfolio. The OSFI is going to do this. The CMHC is going to collapse. You could have heard all this negativity you knew was coming because it's happened every other time in history. And you could have known with that the reliability of a bank dividend is the most reliable financial vehicle we have ever had in Canada. So you knew that once all that talk was done, there was going to be a bump back up in the value of the share price. Now, I don't know when that's going to happen. I don't know if it was going to take 2 weeks, 3 weeks, a month, 3 months, but I know it always happens, and I know the reason it happens is investor behavior. Investors believe what they hear in social media today. They believe what they hear in the news. They believe what they hear in the investment channels. They believe what they hear in Fox News, BNN, MSNBC. They believe it all because they all believe the exact same thing. Those common beliefs result in common trends. Those trends repeat themselves over and over and over again. In Canada, because the Canadian banks are such an important part of our economy, they're such a big part of our TSX, they're such a big part of retirement funds of every Canadian, you know that there's going to be demand for them. You can be sitting there today with a Scotiabank mortgage that you just renewed, or you went back in and recalibrated today, and you were sitting there with an effective minus 5% interest this year. The bank is going to pay you 0.5% of the amount of mortgage that you had borrowed. Think about that, folks. if you're further along in your amortization payment, okay? So if you're halfway into a 25-year amortization, let's say that you're all the way down to, 12 years, okay? It gets even better. You're ratcheting up the negativity of your mortgage interest rate through this strategy. Now, I want to leave this discussion, Jim, with this thought, okay? Because when we hear all this talk about modern monetary theory, okay? Modern monetary theory, the ability to make money out of the clouds. Governments can borrow forever because they're never going to have to repay it. They're just going to continue to deflate or inflate the currency to offset it. Think about right now. If you had the information and you followed historical investing, mortgaging strategy, okay? In other words, you looked at the last 50 years and you said, okay, that seems pretty reliable. And you implemented this plan in April. The bank is paying you to borrow money. But they're reporting that they're still making so much money they can pay you a dividend. That's after they took out another $1 billion plus in terms of preparing for a mortgage debt that they have to write off. Okay? Because really, when you take that part away, the bank still made the same amount of money as you expected they would have made. That's why BMO reported a profit, because in the quarter before, they made sure that they wrote off enough. Scotiabank CEO Porter decided that he would spread it out over 2 quarters. This isn't complicated. This isn't brain surgery. Okay? A standard mortgaging strategy that is designed to reduce your interest payable is now negative. The banks now, as an owner of a bank, they will pay me money to borrow mortgage debt from them.
We'll have more with Ross Kay right after this.
Value from success. Growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. A listener asked Ross, you provided us a question posted to your firm by John in Caledonia, Ontario. John asked, what is your opinion on what is the best wealth building strategy a millennial can practice?
Okay, yes. So this is a question that was posed to us. And actually I went on Twitter last night and interacted with some of the folks that were on Twitter. Generally I don't go back and forth, but this is one of those type of questions that's really good to do that with. And the responses that they came so often, they were close. You can sense, Jim, that they really know what it is. It's just that we're divorced in terms of how we've been taught to think and to how our common sense works out. And that's what this question is about. So in the answer to this question is really quite simple, and it needs to be tested against the last 50 years of financial advice that you're able to access through a simple Google search. The number one wealth building strategy of all time is to stop spending your income on nothing. Stop spending your income on nothing. Oh, what are you talking about? You notice I wanted to use the word spend and nothing, okay? When you come home from work, you have a check, money, that whoever you're working for, or if you're self-employed, that you're bringing home, that you earned, money that you earned, okay? If you own a home, if you own a home, you are going to have to pay banks some money. You're going to have to pay them money for nothing. You're going to pay them money, and the bank hasn't did a single thing to earn it. You're going to have to pay the bank for the privilege of signing a contract with the bank, possibly a decade ago. Once that first contract was signed, except for maybe 5 minutes of a renewal, the bank is going to continue to earn profit from you for doing nothing. Let me put this in context. When you look at, because this also aligns with all of the discussions we have about affordability. In 1990, a 1,400 square foot single detached home that was 1 or 2 years old, brand new, in the city of Burlington, sold for about $120,000. About $120,000. That house today is probably around $8 million. It is a mid-tier property, 3 bedrooms, 1,400 square feet, not a big house, but it was new, brand new in 1990. To carry that house, the average buyer was spending about $1,300, $1,200 to $1,300 a month. That's what the average buyer was spending on that house a month. Now, if you wanted to rent that house in 1990, you would have had to have spent $1,200 a month, the exact same amount, whether you bought it or whether you rented it. The amount of income that you had to spend owning that house was exactly the same. Now, here's what the difference is. In 1990, around 33% of your income, let me get this straight, folks, 33% of the income that you had left over when the federal taxes were taken out, the provincial taxes were taken out, the municipal taxes, property taxes were taken out, you had to spend 39% of the money that you had left over was going towards the bank to pay mortgage interest. Nothing. You were writing a check to the bank. You were giving the bank $38 of every $100 you earned just to cover the interest. Nothing. Now, today, you're only giving the bank about 10% of your income. So for every $100 that you earn, you're only giving the bank about 10% of that money. The rest of the money is going to other purposes. Now think about that. You go from 38% down to 10%. People complain about taxes, and we laugh at it. What are you talking about? That's not how the math works. The number one wealth-building strategy is to stop spending money on nothing. Here's another example, and I know people don't want to hear it. If you choose to live in Ontario, you have to understand that you are going to have to spend more money for nothing than if you lived in Alberta, because the provincial tax is higher in Ontario than it is in Alberta. You are making a conscious decision to spend your money on nothing if you live in Ontario at a higher rate than you're going to spend it in Alberta. If you choose to live in London, Ontario versus Toronto, Ontario, you are going to spend double on your municipal taxes than what you would spend in Toronto. Double. You are going to receive the exact same services, but it's going to cost you double in London. You're spending money on nothing. If you sit back and simply focus on stop spending or minimizing the amount of money that you spend on nothing, minimize the amount of income that you give away for no reason at all. Now, I can understand people say, well, what are you talking about, Ross? The only way you could get that mortgage was that if you had the money. Yeah, but that's where the magic of 2020 comes in, folks. Because in 2020, you are naturally not giving away as much of your income for nothing. Because the mortgage that you have in your property is only costing you 10% of your income. It's not costing you 38% of what you had left over after taxes were paid. As a tenant, in 1990, you were further ahead by renting that house than you were buying it, assuming the house didn't increase in value, which of course, throughout the 90s, the entire decade, you never would have got back the price you paid for that house in 1990. It wasn't until around 2007 where you actually broke even on an inflation-adjusted basis. As a tenant, what you were doing is the money that you were giving, were giving for nothing, went to a landlord, and that was about 35% of the amount of money that you had left over after your federal and provincial taxes were paid. Because you have to remember, the beautiful thing about a tenant is the landlord is covering the municipal tax, the municipal portion of the taxes that you have to pay. And that's included in the rent that you pay him each month or her each month. But that money, remember, is going to nothing. You are not going to have anything left over. It disappears. In 2020, things are not the same. Because now a homeowner, the homeowning decision, it saves you about 200 times the amount of after-tax income than it did in 1990. So in other words, the renter today, actually any time that book called The Wealthy Renter was written, oh, by the way, folks, the author of The Wealthy Renter happened to be a CIBC economist who now is overseeing a REIT. He believed so much in a book that he tried to sell everybody, that appeared on TV stations across Canada, promoting, selling, The Wealthy Renter. You can get rich by renting. He believed it so much he's now selling REIT. He's now overseeing a REIT. This is the person that you're talking about. If you believed The Wealthy Renter, you were spending more money and getting nothing because of his advice. If you sit back and say, okay, I earn $100. I just earned $100. I'm going to come home. I'm going to go home. Before I leave work, the federal government's going to take $10 in taxes, which the federal government, by the way, is going to provide me health care. They're going to provide me transfers. Because if I have 2 kids, it's very likely the federal government is going to give me more money back than I actually paid them out of my $100. Then you have your provincial government. They're going to take $5, depending on the province you choose. Some provinces are going to take 4. Other provinces are going to take 6. Imagine that happening every single bi-week when you're paid. You have to pay less money to the provincial government. You're left with an extra $2 for the sake of the argument out of that 100. And each month, every single paycheck, twice a month when that happens, every 2 weeks, you get to take that extra $2 and invest it in something. Oh, I don't know, maybe bank stocks that pay you dividends. The same bank that you're going to hold a mortgage on, that's going to hold your mortgage for you. Why not own the bank that you're going to hold that's going to lend you the money? Now, I know all these numbers don't perfectly align, and I'm missing decimal places, and you have to understand that the interest rates that are charging, you had to have actually recorded the rents, because, by the way, folks, the legally enforceable rent on that 1,400 square foot home that was 2 years old in 1990, meaning it's now 32 years old, the legal rent on that property today is $2,550 in the province of Ontario, in my hometown. $2,500. And guess what? There's a lineup of people who would be more than happy to take that for only $2,500 a month. Because they believe that if you owned it, you were giving your money away, when it's not actually the truth. It's just the opposite. The conversation is the opposite. Now, I ask everyone to forgive me if I haven't explained this 100% coherently for the way that you're listening to it. Okay? Because this is the explanation we're trying to develop in a listener-friendly way. But the truth of the matter is this, because it comes down to one principle that I wish, Jim, I really, really wish someone had told me or I had listened to when I started my career as a 27-year-old real estate salesperson in the 1980s, the end of the 80s. I wish someone had told me that. Because you know what advice I was given, Jim? I was given the same advice back then as every single person my age was given. You got to give your money to the financial advisors, because if you didn't get 12% compound annual growth rate over the next 30, 40 years, you'd never be able to retire with the same quality of life that you have today. Now, it's only now, 30 years later, when I look at the situation and I said, that was just a bunch of hogwash. That didn't remotely resemble what the next 30 years rolled out, because it was built on false premises, false beliefs. If someone had sat down and said to me, Ross, this is the one thing you have to do. One thing. You do this and you don't have to worry. Don't spend your money on nothing. Always be sure that you're spending your money on something. If that something is principal on your house, buy as much principal on your home as you can. Don't give your money to the bank for doing nothing. Don't give 1,000. Let me end Linda's discussion this way, Jim, because this is a perspective from way back in 1990, before the housing bubble popped at that time. Okay, so this is just before that the housing bubble popped the last time in Ontario, 30 years ago. If you borrowed $100,000, when you came home, you had to give the bank $1,035. Okay? The bank received $1,035 a month of your income for a $100,000 home, $100,000 mortgage. You had to pay $50 to yourself in principal. $1,035 a month out of your income after the federal government had taken its taxes off, after the provincial government had taken its taxes off, after you had paid your municipal taxes, which we refer to as municipal income tax, because there is a constant payment against income that happens with the way that people lease or own homes. After all that was paid, you still had to pay $1,035 to the bank for nothing. You only put $49 for something. It's not that way in 2020.
We'll have more with Ross Kay right after this.
Aven Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aven's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avenresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, a listener asked, his name is Chris, Ross, I'm in the Canadian military and currently preparing to accept another assignment that includes a relocation package. What advice do you have for someone like me?
Well, Chris, I'm going to tell you the same thing that I would have told you 30 years ago, 20 years ago, 10 years ago. You have hit the jackpot, man. You've hit the jackpot. I wish that every Canadian family who is buying a home received the same level of service and oversight that you were provided as a member of the Canadian military. This holds true with RCMP, OPP, and even government workers who are relocated. They take a relocation package. Your relocation package really needs to be optimized. So you're not going to really hear this from your service provider. I think, if I'm not mistaken, Brookfield is still overseeing the military relocation, because there was a big lawsuit over that years ago. Generally speaking, there's about 18,000 relocations that happened across the Canadian public service sector, military, police, government officials. It's around 18,000, 19,000. Those people all get packages, is what you're referring to. So what I'll tell you is, Chris, is follow that relocation package to the letter of the details. Now, I understand it is pages and pages and pages and pages to go over. And I understand you have to watch that you don't cross the line between making something a non-taxable benefit to a taxable benefit. But generally speaking, if you stick with the government paperwork and not the Brookfield paperwork, you're going to be covered. I'm also going to tell you is that Brookfield has conned the Canadian government for 20 years now with their RFPs. Okay? So within the sales industry, Chris, everybody knows the scam that Brookfield, formerly Royal LePage, pulled on the Canadian military. And it's still in the paperwork that you're going to get handed to you today. Because, Chris, if you look through the paperwork, I challenge you, Chris, look through the paperwork and find out somewhere on the buyer's side of the equation where Brookfield or your relocation company or the government mentions that they're covering the commission. You're not going to see it, Chris. You're not going to see it. It doesn't exist because Brookfield has pulled this con now for almost 20 years. They did this to cover up from their previous decades of misleading the military in Canada and the police officers and the RCMP because they implied that they could work for you as a buyer to get you the best price on a home when legally it was impossible. It was against the law to do so. And they have refused to go back and correct that mistake from decades past. In the intervening, about 20 years, 18 to 20 years, depending on the province that you're in, they have allowed this to continue on. And it's even in the paperwork, Chris, that I know you're going to have to sign because I know the paperwork hasn't changed. The last date was 2018, was the last set we saw, and they haven't changed it since. It still doesn't say in there when you're buying a home that the relocation package covers your real estate commission. As far as we know, from the first time a home was ever purchased in Canada, 100% of the real estate commissions were always paid by the buyer. They were always paid by the buyer, and they were included in the purchase price so that the buyer could finance those commissions because they didn't have the money to pay it out of their pocket. Organized real estate frames it the opposite way. Oh, the seller pays the commission. You don't have to pay anything as a buyer. Well, if you buy a private for sale, believe me, you're going to be expecting to get 5% off. Now, second tip, Chris, these contracts that you send with a relocation company do not prevent you from demanding a rebate from your real estate sales rep. Understand, Chris, as a member of the military, the OPP, the RCMP, or the government on a relocation, that is guaranteed cash for the real estate agent you're working with. Guaranteed cash. They know that you have to buy a house. They know that you probably have 5 days, if I'm not mistaken. You can check, Chris, see if I'm right or wrong. You have 5 days to purchase a home. You have a set of expenses that the relocation package covers over those 5 days. If you go beyond that, either you're going to get a letter from your boss saying it's okay, or you're going to have to pay those expenses yourself. So I know these contracts, Chris, to the letter of the law, because we used to help people with this problem for a couple of decades. What you need to do, Chris, is make sure that you ask for a $5,000 kickback from your real estate agent. Because, Chris, the way that the contracts are written with the military on relocation, there is nothing preventing you from receiving that kickback. And that kickback, legally, anywhere in Canada, does not have to be included in the purchase contract. So in other words, you actually physically get cash back from the real estate agent you're working with to buy a home, which is being paid for out of the relocation package. It's a beautiful thing, Chris. This is just another way that a well-deserving Canadian in the military might get a little bit of a break. I'm going to tell you to go through that relocation package and pick out everything that they do and maximize it. When they talk about the appraisal, assist on the second appraisal. I know you're going to get pushback, but just do it. Okay, if you have a property that you're selling, get the second appraisal. You push, they're going to give it to you. Go ahead and make sure that when you're getting a building inspection, that you ask to see what the quote was for the province that you're buying in terms of what the program is, because it varies from province to province, as does the appraisal fee that the military will cover. Check, because you want to make sure that you're getting the best home inspection possible. If your home inspection will pay you $625 and the going rate is $500, ask the home inspector if he can put an extra $100 worth of effort in because you have that room to charge him. Pay him. or her. If they're going to be there for an extra hour doing the inspection, that's always going to only be beneficial to you. So to summarize the whole thing, how we see it anyways, Chris, you have a once in a lifetime opportunity. You have the ability probably still to access a second mortgage interest credit. You have the ability to have a guaranteed price on your home where you have up to probably around $20,000 the military will guarantee against the loss. You have mortgage interest rate. If your current mortgage needs to be discharged in order for you to get a new mortgage on the new property, that's included in your package. One of the best ones, Chris, that I want to leave with, and I'll end this conversation here today, is the fact that the Canadian military in their relocation package, as well as OPP and RCMP and government employees, your mortgage default insurance, I believe they term it MDI, is included as part of your relocation package. In other words, if you buy your next home with less than 20% down, now I know there's a couple of comments in there that you can't trade off too much mortgage, but the government will pay your CMHC fees for you. So you think about it. We're talking a maximized relocation package that easily can return you 17% of the value of the home that you're buying. It's a staggering amount of money, Chris. Look that contract over. Don't listen to Brookfield. Make sure that you get the government papers themselves where the policy's all laid out. Review it. And I want you to remember this. None of the leadership over you in the forces is going to look down upon you for you demanding everything that's included in the relocation package. I used to get young folks being transferred, and I was young at the time too, and they were always seemed to be apprehensive when I looked at the package and I said, hey guys, we can go up to $450 a building inspection here. Let's hire this guy because he will spend the time and do that inspection. And they would say, well, Ross, these other guys are only $300. And I said, yeah, guys, but this protects you. You are doing a service to our country. You are not paid at a premium to do that job. One of the advantages, is that they're going to move your family from one base to another for their own personal gains, the military's gain. They are moving you only because they believe you are a valuable asset to the force that you're working for. This is for RCMP, OPP as well. Take advantage of that relocation package. And then what I want you to do, Chris, is to tell everybody in your family, that they should get a copy of this relocation package, and this is exactly how they should move. Because your relocation package lays out everything that any homeowner needs to know when relocating or trading homes. If there's an I to be dotted, a T to be crossed, it's included in that paperwork. Now, they may have to pay for all the things that you're being included in your package, but at least they know by looking at your package what the real world of relocation is supposed to look like. You're being delivered a service, Chris, that every single Canadian family deserves from our perspective. Everything that we do as a company is to deliver the exact same level of service that you're getting, except people have to decide if they want to pay for it or not. Not us, other people. We save the people money so that they can spend it the same way that you're accessing. We just can't save them the magnitude. We can't get the mortgage discount. Oh, by the way, Chris, don't forget the mortgage paydown clause, because the mortgage paydown clause is one of the best tools the military never utilizes. But thanks for the question, and thanks for representing our country.
Ross, thank you so much for being on the show.
Thanks for having me on, Jim.
My guest has been home ownership consultant Ross Kay from the wealthyhomeowner.ca. If you have any questions for Ross or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet. Our popular YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.